So today I was having a conversation with someone about the news and interest rates. And I think that there's a lot of confusion around interest rates because they show up in so many different things. And like there's positive interest rates, there's negative interest rates for like most of us, the majority of us. And then when it comes to a lot of loans and bank rates, there's an internal interest rate that the banks use amongst each other. So I'm going to link a video that I think does a pretty decent job of explaining without being maybe too confusing, but it's hard for me to know because I do have a bit of a background in finance. And so not sure, let me know if it doesn't make any sense, but essentially there is an internal interest rate that the banks use amongst each other. And the goal is that when this interest rate goes up or down, they're hoping that the interest rates will be favorable to the consumers due to things like pressures. And so it does not just mean that, okay, this interest rate goes down, now you're definitely going to see this show up in, different types of loans and credit cards and banks and stuff like that, like your savings accounts, money market accounts, and things like that. And that's why they usually say don't make any moves quickly just because you hear it, because it usually takes a little bit of time before the consumer actually sees the changes or the impact. So all of this is more like we hope this is what will happen. And so the interesting thing is, if you say have money in a savings account, interest rates going down mean you're going to earn less money on your dollars from the bank. However, when you have something like interest on a credit card or a loan, interest rates going down means you're going to pay less on that borrowed money. Therefore, that can be a more positive thing. Now, something that I found was really funny is, and I'll talk about this in another video, but I suffered some major financial challenges as a result of COVID, a lot of it to do with my personal mental health journey and literally just being debilitated from being able to do my work. It was a really challenging time. And so I'm now coming out and I've been working on kind of repairing all of those challenges that I went through back then. And, 5 years later, I'm finally seeing some light at the end of the tunnel. But I also have a background in being in the financial industry. So some of the things that I wanted to share are things that I learned that, coincidentally or not, because of the way that things are regulated, despite my learning and my studies, I sometimes had less influence or the ability to share knowledge about finances while in the industry because of the distrust and because there are so many scams and there are a lot of low-rated companies, but we won't get into that today. And so because I'm finally starting to breathe again, I noticed that maybe one or two of my credit cards here and there would increase my limit without me having to call and ask them to raise it. I mean, I've done it before where I've called and I've had them raise it. And when we're looking at our credit scores, that can be positive because then the amount that you're borrowing is going to be a smaller percentage of the total credit that you have. That's your credit utilization percentage. And I was like, okay, that's cool. That could have maybe a positive impact on repairing my credit score. And then when I really thought about it, I'm like, no, what they actually want is for me to spend more money with them. So if I'm like, I have a certain, let's just call it $5,000, and then I'm struggling, which is what a lot of people are going through right now, I might get really close to that $5,000 limit. So if out of nowhere, because certain parts of my credit patterns are improving, and then they just go ahead and decide, okay, let's just raise it by $1,000. Now you have $6,000. Well, if I'm struggling and I can't pay my bills, I now have another $1,000 available to me. But guess what? The banks are going to earn most of their money through credit cards, which is why so many banks have them, because they earn the interest back when people can't pay. And then they're going to get it from loan interest and things like that, auto loans. And so when they pay you the measly, 0.001%, and they give you like a quarter every other month on your savings accounts, and yet they're turning around and charging you, I don't know, like 8 to 10% on auto loans, then they're charging you like anywhere from like 20 to 30% on your credit cards. It's really interesting, right? But really at the end of the day, when they decrease the interest rate, your savings account, I mean, you're barely making pennies on your dollars anyways. That's not going to be as big of an impact, but it could make a difference if you have a pretty sizable amount. But really at the end of the day, if they supposedly are trying to get the economy going, what that really is people cannot afford to take out loans right now because of how the job market is, inflation and all of that. And so not a lot of people are borrowing money, therefore the banks are making less money. And so when you lower the interest rates and you get the media involved and you get people excited to get these low interest rates, and they'll get 1% less, which yes, over time can amount to quite a bit of money. But guess what? If you had $1 million as a bank that you are loaning out to people, and because the economy is not going well, it's just stagnant and you're just kind of getting that recurring interest off that $1 million. Well, guess what? When you put it in the news that the interest rates are going to go down, and then they go down, people are going to go wild, right? To get that deal. And so now let's just say you go and you now have $10 million in these loans because of the lower interest rate. Guess who just made more money? And so the illusion is that you're able to get more money in your pockets. But I have this little representation that I want to use with some paper clips to show you that we can't really fall for these illusions anymore. And although we have to fall within the system and still work within the system right now while it is going through this transformation, we all know what will actually get the economy going. And this is exactly what the situation is right now. So I think this does a really good job of representing, obviously this would be a lot bigger of a pile, but this is meant to kind of represent the money that is available to like 99% of the population. And I'm purposely using smaller paper clips here as well. And this is the wealth that is within the top 1% and maybe even the top 10%, but this should be, a lot larger in proportion. But essentially what's happening is this is all an illusion, right? They are having us play around with these 3 little paper clips saying, we're going to raise interest rates, we're going to lower interest rates, we're going to do this to inflation. And they're kind of manipulating the system, right? And all of us are like, okay, what do we do with our 3 little paper clips? Do I, go here and earn 0.01%? Do I go here and maybe earn 1%? But then I also, in order to get, almost 100% more, in order to get like 1% more, which is like multiples of 0.01, I also have to sacrifice my values a little bit because this corporation invests in things that don't care about humanitarian values in human life. And then, or do I go here and then, it's not protected at all, but I can earn more, but it's also a lot riskier. And so we're kind of just like going between these very few little options of like, 0.01% or 1%, or can I earn, 2 pennies here, or can I earn 50 cents here? That's gonna, add up to thousands of dollars if I just wait enough decades. Whereas all this wealth is just mixing and mingling around here, and they have all the options in the world, and they have all the ability to jog the economy, and the times that we see it in the form of this philanthropy, because really at the end of the day, when you give money that maybe you should just pay people more and take less profits off of in the first place, you have all this extra money that you can give to these charitable causes, and now you're seen as this saint and this savior. And so this is why there's an issue with philanthropy right now. And then guess what? Who should I give the money to? Maybe it's the ones that I can manipulate the most or get the most value, extract the most value out of that transaction, when I'm actually really just getting a really huge, tax break. Now, I'm not saying that the people that do philanthropy are all like this, but we know that there are a lot of people out there who are maybe not working so much in the best interests of people, but again, they're giving you the illusion of that because of their philanthropy, when they have every ability to actually disperse their wealth in ways that would serve thousands and millions of people, and they choose not to, right? So let's not forget what is really happening here and how this distribution of wealth is. So we really have to just go back to our foundations, and sometimes we might have to make certain decisions. But again, if you are struggling right now to pay your bills and put food on the table, and food banks are really heavily impacted right now, and unfortunately there's a lot of closures and there are way more people needing these services, that it is really hard to get your basic needs met. Sometimes we do have to sacrifice a little bit of our values in order to put food on the table or do what we need to do to survive. However, there are so many different ways that we can really work within the system to create this change. And so this is where we have to start redeveloping that sense of empowerment that we actually can do things. We just have to do the things that are right for us and not feel guilty, not shame other people that they're not doing it in the same way as you. But as long as we are holding the intention that in our own way we are going to impact and disrupt the system, then we are all good. And that just means we are disrupting it from all possible sides and angles. So I think my main point that I want to get across to you all is one that we've been hearing so much: do not rely too much on the media, and actually do your due diligence and try to learn more about these things so that you're not just reacting to what the media wants to influence you to do or to not do. When we think about this as this whole operation that is being manufactured and controlled by certain powers and entities, when we don't understand what's happening behind the scenes, we might react to it and we might do things that aren't necessarily favorable to us because we're not understanding, just because the interest rates go down for the banks, that doesn't necessarily mean I'm going to see any major impacts. And that's also why they say, watch your accounts, watch how things are going, because they don't know. And so when we take back our power and we start to really stand in our values, and we also say, no, I am not going to follow, this trend or these patterns, guess what? We also throw off all of their patterns and their recognition. And so it's going to make it harder and harder for them to control things, because the predictability is going to start disappearing as we all change up our routines, as we do different things. And now I'm just making the connection to the new moon eclipse in Virgo that just happened. This is all about change, but it's also about routines. So by transforming our routines and doing things differently, we are actually taking back control, because they're not going to be able to control us if they cannot predict our patterns and behaviors. And that is everything behind algorithms and marketing and advertising. If we start to make their data less and less credible, that is how we can actually start disrupting and imploding the system from the inside. So hope this is helpful. Let me know if you have any questions, and let's keep having these conversations.